Yo, what's up, guys? I just bought a brand new stock in my portfolio for the first time ever. I've never previously owned this company before, so we're going to be deep diving into the company. We're first going to be breaking down their financials, then we're going to dig into the investor presentation because I love the financials and I love even more what the company does. And this company trades at a 21 forward PE, absolutely no debt whatsoever. So, yeah, let's just get straight into the video. If you would, please drop a like on the video for me. I greatly appreciate that. But this new stock we bought was actually in our Roth IRA, and the new stock I bought was ticker symbol CVCO Cavco. They trade at a 21 forward multiple. On the year, they're up 13%. So I thought now's a pretty fair time to buy them. I pretty much bought them at an all-time high. I wish I could get them at a lower price, but I'm not going to miss out because I know the valuation's fair at right now's valuation. So I don't mind paying it. Like Warren Buffett says, it's better to buy a quality company at a fair price than a fair company at a quality price or whatever, however the saying goes. But anyway, check this out right here. To keep it short, they make factory built houses that are affordable. There's no land speculation risk. I love the net income right here. Check this out. The net income growth has been phenomenal. It's up 19% year over year. But another major thing about this company is the share buybacks that they do. So the net income is up by 19, but the net income per share is up by 24. Again, the EPS growth rate and the net income growth rate should always be the exact same. The only thing that changes this is the share part of the ratio. So that's what's very cool about this stock. They're in like this market cap that I love. The company is worth, $4.5 billion. I think that's pretty fair. Yeah, the forward PE is a 21. Yeah, $4.5 billion company making great net income, great EPS, and this fortress balance sheet right here. But let me show you how much they're spending on share buybacks right now, because that's what's really impressive. And they also can easily afford to pay a dividend. They just choose not to. But yeah, check this out. They're spending $40 to $50 million of share buybacks a quarter. And it's only a $4.5 billion company. So yeah, that really is about 5% of the company they've bought back just in the past year. And that's after the previous year, they bought back another 5%. So yeah, this company I really like. But let me show you a little bit more about their investor presentation and why I like them for the industry. All right, so here's their most recent October 2025 investor presentation. There's so much to look at here. I can't wait to share with you this. So yeah, they have a nice gross margin, but most affordable form of unsubsidized home ownership, less material waste, and no land speculation risk. And again, company has no debt at all. And check this out here. Demonstrated track record of disciplined capital allocation via M&A and capacity expansion, strong free cash flow generation. But here's what people are saying, or here's what the experts are saying. 69% of Americans said they were very concerned about the cost of housing, up from 61% in April. Housing experts say there just aren't enough homes in the US. The housing crisis needs risk takers that can change it. And check this out right here. This is what I really love about Cavco. I want to show you some of the pictures. They have some pictures down here, and then we'll scroll back to some of these other slides right here. But yeah, they make these factory built houses that actually look fantastic. They have little park models right here that look great. They have HUD code home construction. So, federal standard, yeah, most, if any, neighborhoods would allow a house like this. Modular homes built off-site. They're transported, assembled, and customized on-site to local construction standards. Pretty cool. So yeah, there's retail houses. Look at these. Like if you're a park, like that's very nice picture there. It's like in Arizona or something. A bunch of little of these park houses because you could Airbnb it. Communities like in Florida, they have a very nice modern style houses there. And their average, I want to show you this. Yeah, look at this. They sold 20,000 homes, and their average net revenue per home sold is $99,000. Not too shabby. We can see the net revenue, diluted earnings per share. This is for the trailing 12 months of $24. Again, 21 forward PE on the company. The stock's like $540 or something. But yeah, nice free cash flow. They have a backlog as well. Again, no debt at all. $210 million backlog of factory homes. Check this out. Zero debt whatsoever, and an undrawn $75 million credit facility available if they ever need to do that. Yeah, capital deployment. Crazy on the share repurchases. That's like 8% of the company worth the share buybacks right here. Strategic acquisitions. Yeah, they have a very cool acquisition that was on a different presentation. I might go to that a little later. But yeah, cumulative share repurchases. They've bought back 17% of all the shares that exist. I mean, that's so impressive. And 5% of that was literally just this year, and another 4% was the previous year. So that's what's really impressive about them. And they say, despite economic cycles, like it could be a cyclical business, Cavco will thrive because of lower price point, no land cost or risk. I'm actually trying to study and dig more to see if this is somewhat like recession resilient. Maybe people will go more buying these kind of houses because they said in another slide that it's literally comparable and the same pricing as renting an apartment in some cases. Like you could literally get one of their houses at the same monthly cost as a apartment and you can own it or whatever. So it's really cool the proposition that they have here, and I totally wouldn't mind living in one of these houses. Sadly, I've watched a bunch of YouTube videos seeing the insides of these. Like they have duplexes and stuff that they sell as well. I just really like what this company does, and I love the financials. No debt, lots of share buybacks, doing M&A, maybe recession resilient, got a bit of a backlog. So I would put this one on the watch list. I mean, it's not a crazy great buy right now because it is basically at all-time highs, but I don't mind buying a little bit of the stock at all-time highs because in my opinion, this is the kind of stock that's just going to continue to climb higher. Again, not financial advice. I'm definitely not an expert. I don't know what I'm talking about. But yeah, average retail sales price approximately 124K compared to 410,000 for site-built home only. So rising interest rates have proportionally less impact on monthly payments. Oh, that's actually very interesting. So ownership, yeah, ownership at monthly cost comparable to apartment rents. Zoning restrictions are beginning to ease in response to affordability issues. Maybe not in California, but these other states. That we're trying to solve nationwide impact, approximately 6 million housing unit deficit. So, maybe Cavco's the answer. All right, so I have some more good news about this stock. They have so much net cash. They have $45 per share in net cash, or $353 million in net cash. The whole company is worth 4.5 billion, so roughly 8% of the whole market cap is just their cash on hand. Plus, if you add back in the backlog in their inventory, you could do like this X cash PE multiple. This company just seems at a very fair valuation, 22 PE. Check this out though. They have an earnings yield of 4.32%. Basically, they make 4.32% of $4.57 billion of net income every single year. It's weird looking at the yield, but I like looking at this because it easily covers the buyback yield. So of course, right now, this company doesn't pay a dividend, so there's no metrics here, but they've bought back 3.4% of the company, and they can easily afford that with the net income that they made and the free cash flow that they made. The free cash flow yield as well easily covers that. But also check out the total common shares outstanding. This is what I'm talking about with the share buybacks. If we just go back to 2022 or 2021, there was 9.1 billion shares, or no, 9.1 million shares. Now there's only 7.9 million. Look, it just goes down every single quarter. So yeah, I love how shareholder friendly this company is. I know one day they'll most likely pay a dividend, but I like the fact that they don't pay a dividend yet. So I'm very curious to see what'll happen. I'm just going to hold this one for the next couple years. I actually just clicked on the Seeking Alpha article right here. Someone said, or Abdul said, Kafka Industries acquisition and buybacks build a compelling case. I didn't know this. Kafka's acquisition of American Homestar expanded its presence and boosting its market share to 15%. That's a great market share. You're basically buying the industry leader here. I'm going to go through a few of these slides. I'll let you know if I see anything kind of cool here. Yeah, trades at a premium forward PE of around 22.8. Its peers are around a 12. So yeah, but I'll explain why Kafka trading at the premium valuation to its indirect peers operating. I believe Kafka is fairly traded at this premium. Yeah, strong balance sheet, no debt, lots of cash, share repurchase program. Now the company has 141 million worth of shares to be repurchased, signaling an inorganic growth catalyst. So, I mean, I don't want to go through all these slides here, but certainly seems pretty interesting right here. All right, here's the 2027 estimate for EPS, $28. Here are some of their competitors, I guess, if you wanted to like look those up, maybe check out, maybe if one of them's cheaper. Oh, here, I guess they're all lined up right here. Yeah, peer average is a 12, Cavco up there at a 22. But I'm saying I really love this company. I recommend buying Cavco Industries driven by its strong growth catalyst. Share repurchase program could realistically be completed with the company's big pile of cash and zero corporate debt. The acquisition of America Homestar will drive EPS and revenue up at higher rates than its direct peer Sky. Long-term market conditions are favorable, capitalizing on the growth in Southeast and Far West. So there we go. I don't know if that's helpful. I guess maybe. So if you like this kind of stuff, please drop a like on the video for me. I greatly appreciate that. Let me know if you like Cavco. Again, none of this is financial advice, and see you in the next one. Oh, check out my previous video up here.